Indonesia's crypto tax revenue skyrockets 181%, but volatility raises red flags. Crypto tax. Indonesia. Tax. Journalist. Hasan Shittu. Journalist. Hasan Shittu. About author. Hasan, a Cryptonews.com journalist with 6+ years of experience in Web3 journalism, brings deep knowledge across crypto, Web3 gaming, NFTs, and play-to-earn sectors. His work has appeared in Author Profile, Share, Copied, last updated, August 1, 2025. Why trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards, focusing on factual accuracy and balanced reporting across all areas, from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. Indonesia's annual crypto tax revenue jumped sharply in 2024, marking its highest level since the government introduced taxation on digital assets in 2022. According to officials from the Directorate General of Taxes, the country collected 620 billion rupiah, around $38 million, last year, a 181% rise from the 220 billion rupiah recorded in 2023. The sharp increase reflects a broader surge in local crypto activity. Officials attributed the growth to a rise in transaction volumes, which reportedly reached 650 trillion rupiah, $39.67 billion, in 2024. This aligns with Indonesia's growing crypto user base, which now stands at over 20 million people, surpassing the number of stock market investors. Crypto tax revenue in Indonesia surged in 2024, but 2025 off to a slower start. However, the momentum may not last. Year-to-date figures for 2025 show a steep drop in tax revenue, with collections sitting at just 115 billion rupiah, $6.97 million, as of July. Officials point to crypto market volatility as a key factor behind the fluctuations. Crypto is a long-term investment. The price can drop, said Hestu Yoga Saksama, Director of Tax Regulations I at the Directorate General of Taxes. It could spike, it could drop, it depends on what kind of fever it is. If the fever is high, then the reception will be good. The tax was first introduced in 2022 and includes both Final Value Added Tax, VAT, and Article 22 income tax on crypto trading. In its first year, crypto taxes brought in 246 billion rupiah. The drop in 2023 raised concerns before the market rebounded sharply last year. To manage this growing sector, the government introduced several new regulations in 2025. Among them are updated ministerial decrees that set out tax rules for crypto asset trading and amend existing tax frameworks to reflect the evolving digital asset space. Indonesia has also reclassified crypto assets from commodities to financial assets. This move brings the sector under the oversight of the Financial Services Authority, OJK, indicating a shift in how the country views crypto's role in its broader financial system. Jan Arsel, an advisor to the Minister of Finance, emphasized the need for collaboration. It's not enough to simply expand the scope, he said. We must also coordinate. We're encouraging better coordination with our external stakeholders, including the Financial Services Authority. Indonesia raises crypto taxes on foreign exchanges, cuts VAT for buyers. The government also rolled out tax reforms in August designed to shift activity toward domestic crypto platforms. Taxes on foreign exchanges were raised from 0.2% to 1%, while domestic platforms saw a smaller hike from 0.1% to 0.21%. Buyers, however, are no longer subject to VAT, creating an incentive for local trading. Crypto mining operations weren't left out. VAT on mining has doubled from 1.1% to 2.2%, and a special 0.1% income tax for miners will be removed in 2026. After that, mining income will be taxed under regular personal or corporate tax rates. Speaking to Cryptonews, Gregory Cowles, Chief Strategy Officer of IntelliStake.ai, noted that crypto taxation needs to strike a balance. It's fair that governments want their share, but overly aggressive or unclear policies risk pushing users offshore or into informal channels. He continued, saying, especially in emerging markets, crypto is often more than just speculation. It's a workaround for currency instability or limited access to banking. If taxation becomes too punitive, it could stifle that utility. Despite the volatility challenges, officials view crypto taxation as a growing source of revenue. The government's ability to capture earnings from the booming digital asset market, particularly among younger investors aged 18 to 30, is seen as a long-term opportunity. Still, the unpredictable nature of crypto prices poses a challenge for revenue planning. As Yoga noted, it really depends on the market. If activity drops, so does the revenue. As 2025 unfolds, the country's crypto tax collections may continue to reflect the highs and lows of a volatile but rapidly expanding sector. Gregory Cowles further noted that, if governments start to treat crypto tax income as a stable budget item, they may be setting themselves up for disappointment. Indonesia ranks third globally for crypto adoption as youth trading soars. Indonesia's crypto sector is seeing a sharp rise in activity, fueled largely by its young population. Over 60% of the country's crypto investors are aged between 18 and 30, according to data from the Commodity Futures Trading Regulatory Agency, BPEPT. This surge in young investor participation has helped position Indonesia as the third highest country on Chainalysis's Global Cryptocurrency Adoption Index. In 2024, Indonesia recorded more than $30 billion in crypto transactions by October, a steep rise from $6.5 billion the previous year. While still below the 2021 peak of $54 billion, this marks a 352% year-over-year increase. The number of registered crypto traders in the country also grew, reaching 21 million. At the regulatory level, the country is undergoing a shift in oversight. The transfer of authority from BPEPT to the Financial Services Authority, OJK, initially planned for January 2025, was delayed due to the absence of supporting government regulations. Once finalized, the OJK is expected to provide a more structured regulatory framework aligned with global standards, including clearer rules on trading, taxation, and exchange operations. Follow us on Google News, Trending News, Recommended Popular Crypto Topics Price Predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. Leading AI Claude predicts the price of XRP, Dogecoin and Solana. ChatGPT predicts the price of XRP, Shiba Inu and Cardano by the end of 2025. Bitcoin price prediction. How Trump media's massive BTC acquisition could reshape market outlook. Price analysis. XRP price prediction. Overtaking ETH on Coinbase. Is this the start of a big XRP rally? 2 days ago, by Arslan Butt. Press releases. XRP holders achieve financial freedom through blockchain cloud mining. Price analysis. China's DeepSeek AI predicts the price of XRP, Dogecoin and Solana by the end of 2025. 5 days ago, by Tim Hackey. Best crypto to buy now in August 2025. Top crypto to invest in. 3 days ago, by Alan Draper. New cryptocurrencies to invest in August 2025. Top new crypto coins. 2 days ago, by Inesis Tavares. 12 best crypto presales to invest in 2025. Presale crypto list. 2 days ago, by Alan Draper. 16 new and upcoming Coinbase listings in August 2025. 3 days ago, by Elijah Rankovich. 16 new and upcoming Binance listings in 2025. 4 days ago, by Elijah Rankovich. What is the next crypto to explode in 2025? 3 days ago, by Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. 5 hours ago, by Leon Waters. Ripple, XRP, price prediction 2025, 2026 to 2030. July 5, 2025, by Eric Huffman. Ethereum price prediction 2025 to 2030. Will ETH bounce back? April 2, 2025, by Ben Beto.